Now that we know why we want to invest, the next question is, why do we want to focus on investing in stocks, which are just shares of ownership in public companies? There are so many investments out there. You could invest in real estate, commodities like gold and silver, or you can even buy collectibles like art or Pokemon cards. But the reason we want to invest in companies within this video specifically is that it's very accessible, it has predictable returns over time, and it's very liquid. When an investment is liquid, it means you can convert that investment into cash without much trouble. If you buy a house for $500,000 in cash and you wanted to sell the house next week and get your $500,000 back, it's not going to be really easy. You would have to typically list the house again, you would have to find a buyer, and then go through that whole real estate process, which usually takes at least 30 days. Real estate in this case is not very liquid. However, buying a stock on the stock market is very liquid. You could buy a share of Coca-Cola stock in the morning and sell it in the afternoon and get your money out. In terms of predictable returns, earlier I said that the stock market as a whole typically returns 8 to 10% per year as an investment. So this is the graph that represents the top 500 companies in the United States, also known as the S&P 500. But for now, what I want you to see is that the trend of the S&P 500 is that it grows slowly over time. I mean, you will get some dips and valleys here and there, as well as periods of flat trading, but over a long period of time, this should go up, which means that it would benefit you to be a long-term investor. So historically, if you invested your money into the S&P 500, it would grow at that rate of 8 to 10% per year. So for example, if you had $100 of your hard-earned money in 1980, say you were alive back then, and you left it invested in the entire stock market, which you can do with an index fund, it would be worth over $17,000 today. That means your money has still gone up in value 44 times more than inflation just for investing, and that's pretty cool.